Ladies and gentlemen of what's remaining of the crypto space, we're live on a Friday, January 6th at 11:09 a.m. This is a perfect time to talk about this topic, and it's something I use to understand the nature of everything we deal with. Everything we deal with is needs to be understood from a psychological perspective. If you understand the mentality of a person interacting with a market, either it's be it a shallow or trivial psychology where there's not much due diligence, so on and so forth, or a sophisticated actor, understanding these psychological considerations that drive motivation to take action helps you understand why markets do what they do. Because ultimately, the directionality, the movement of the market is the aggregate of all these psychologies. Literally, when we look at a chart, we're looking at the aggregate market actor psychology, or at least the repercussion, the outcome, the cumulative result of all these people having these different opinions and thoughts, and they take action in these markets. And that's why charts are so meaningful. It's the aggregate. This is looking at the entire, 100,000, million, whatever, how big a specific market is. You're looking at literally the collective output of all the people interacting with that market. And that's an extraordinary psychological consideration when you think about how much information, how much thought process, and how much each individual person is expending with regard to effort. And this is the complete condensation of all that activity represented by a line. That's I find that quite fascinating when I think about it. So this is a market full of predators. I've said that. It's unfortunate. It's real. And the predators exist in a more bullish market environment as well. But now that brings up concepts like capital flow, inflow versus outflow, amount of available liquidity. The predator-prey relationship changes when there's an increasing food supply, and that's really the way you need to think about assets in regards. It's maybe a food supply, and the predators and are coordinating to accumulate reserves of natural resource. So not in this instance, these are synthetic assets and a result of hyperfinancialization, so on and so forth. But that's irrespective of these psychological considerations. The predators are fighting over a decreasing supply of natural resources. When we look at Defi Llama, we see that it's a decreasing set of natural resources. Let's go back real quick. Stable coins. This is a decreasing supply of natural resources. Um, we've talked about this in length. So this is the maximum amount of resources that any predator can get their hands on. And obviously these natural resources are spread amongst many markets. And each market has different considerations. Each market is like a different territory, a different terrain, a different environment, different process for like water supply, like a river flowing in, and it drives participants to go in because there's an opportunity, because there's resources. You know, Animals will collect, will organize around a pool of water because they need the resources. So this is a reasonable analogy, how you look at this as the total supply of natural resources in a gross environment, and then you can look at each individual market, whatever you're looking at, as a different region within that larger system. Well, not that chart. Um, so what types of predators? This is something I've known about, but it's something I could point out as being quite interesting. This is a fascinating relationship or symbiotic relationship. And this goes back to humans. This goes back to all the history that you could possibly think of with regard to territorial disputes and war and different types of actors, the concept of altruism. Um, this is the most productive of predators. This is a predator that, whether instinctually and likely in the case of a shark, or intelligently in the case of a human, understands that there's only a certain amount of resources, and if the predators come in and decimate everything, there's no more fucking resources left. There's nothing to go after. So that would be akin to predators that have all the power, just taking all the resources, and everything goes to zero. But then the predators don't have any more resources to gather in the future. So the intelligent predator does not destroy a habitat. The intelligent predator looks to create relationships with all the coexisting inhabitants of a habitat such that there's a sustainability to what's occurring, such that there's resources into the future. So this is a fascinating visual depiction of that. This shark thinks instinctually and understands that these little fish are doing him a favor, and they're participating in his well-being. So it's in the shark's best interest to not destroy the smaller fish. It's in the shark's best interest not. Well, I don't think he understands the nature of a macro habitat. He just understands eating, but at least he understands his micro habitat. So he's not going after the fish, and that's quite interesting. He's building a relationship to support his well-being, and which in turn supports the well-being of the ecosystem. And this is akin to market actors, especially in the later stages of DeFi. At least the more interesting of markets. There's very few occurrences of this, but I think I'm starting to see a couple of outliers. I don't name specifics, but when you see, let's say, a large actor, like someone who could literally decimate an ecosystem and take all the resources for himself, but he's aligned and he's not decimating all the resources, and he's actually being more constructive with the cohabitants of the ecosystem, because he understands, let's say someone has, let's say, $12 million worth of capital. It's a relatively shallow, low liquidity environment, and he has a capacity to extract all of that value. But he doesn't, because he wants value into the future. And that creates an opportunity for the smaller actors to actually partake in the value in the future, rather than just simply decimating it. I find this concept fascinating. I wanted to share it with you guys. It's something that's quite meaningful, especially in these market conditions, but will continue to be meaningful in future market conditions, especially even in bullish market conditions. And I hope it helps. Draw this analogy, apply it, which basically means you're looking at Etherscan, which basically means you're looking at DBank to inspect the large actors that are doing transactions. You see transactions, the transaction history. So there's plenty of indexes that show the transaction history for a particular pair. And you can see the transaction ID, so you can see who's making relatively large transactions. So you can track down the large owners, the top holders list on Etherscan, and you can see who the large actors are. Those are the sharks, whales, but it's more ferocious. It's more of a predatorial thing. Whales are more passive. I don't think the analogy is best served using them as an example, but the shark is a better example. And if they're acting constructively with the community, that could present a consideration, an opportunity. Bear in mind, let's say, like someone who has $12 million and there's like $36 million worth of liquidity. There now, if the large shark is expressing, support of the ecosystem, it's in his best interest to actually buy, to support the price point, to support the sustainability of the protocol, the health of the protocol, such that the market looks healthy enough for capital inflow to be more balanced with capital outflow. And that's what we talk about with regard to balanced trade deals and whether liquidity is flowing in or out, increasing or decreasing. So he actually is quite incentivized to support the health and maintenance of the capital flow of the ecosystem. Capital flow, the natural resource flow of the ecosystem, natural resources being available, being put in, or being taken away and consumed and taken out. So that's quite interesting. When you have a large predator on your side, I guess, clearly you always have to be cognizant of the fact that they're a fucking predator and they could goddamn eat you. But that's besides the point. If they're acting constructively, that definitely is a consideration to evaluate from a risk-reward perspective. Um, that's about it. There's another consideration that I was thinking about, and I wanted to talk about. In bearish times when you have liquidity draining from the system, that's the broad market. There's still $137 billion worth of capital. It means we're chasing a negative sum game, and the whales have more leverage and capacity to access and consume that available natural resource. But that doesn't mean there's no natural resources. That just means that the deployment, the expenditure of those natural resources will be much more well thought out to and not just, oh, I'm going to buy this, I'm going to buy this, I'm going to buy this. And that's exactly what a tightening liquidity environment causes. It causes the more well thought out deployment of capital rather than frivolous deployment. So there's still opportunity. It's sparse. It requires that extensive due diligence to assess what is occurring within a particular market, sub-market, micro-market, within a particular micro-environment. This is the macro environment, macro crypto environment. So there still is some opportunities, and there will be few and far between because the vast majority of predators act instinctually. They will take resources for themselves. And if you're playing capital gains, you are playing an uphill battle in this kind of market. This is not a market to run in to a field of lions and try and drag out a gazelle, and you're a frickin' bunny rabbit. So, let's say you're a bunny rabbit, $1,000, trying to pull out a gazelle, $10,000, surrounded by lions, $1,000,000. $1,000,000 is going to take the damn gazelle and he's going to eat you too as a little tiny rabbit. So fascinating biological analogies to consider in digesting literally what everyone who follows me on Twitter, or is considering engaging in this market, literally what everyone is doing. They're engaging in a biologically analogous activity as the result of hyperfinancialization. Dan's in the house, a pleasure. Buy low, sell high. Yes, my friend. HB morning, no, a long time since I caught you live. Best 30 minutes of the day. It's a pleasure. Always was and always will be. What's C? Good morning. Loki. Hey, no, unfortunately I can't stay for the stream. Super happy to get your insights. What's your thoughts on Solidly? I also have a lock position left over from the launch. That is probably that's the thought. Folks that have a carryover position that they burned on Phantom, great. That's it. Otherwise, that is a whale game. Everything that's occurring with Solidly is a whale game. There is a tremendous amount of asset carryover, tremendous amount of assets that were burned, very large actors involved, and brings up a couple of points. It's always a cost-benefit analysis. If you're going to deploy capital and you're only going to get like $10 here and there, it's not really an efficient means of deploying capital. I wanted to bring up this point. The hardest part of engaging a market is seeing an opportunity and being able to identify that the opportunity cannot be taken because of lacking position size. What happens is if you take an opportunity and you lack the capacity to have it be a meaningful position size, you're spreading too thin. And yeah, the smaller and smaller a portfolio is, the more likely it is to be spread too thin. I mean, if you got $500, you can't do any of this DeFi stuff. You literally just have to resort to capital gains, which is a rabbit running into a field of lions to pull out a gazelle. Now, the thing is, when there's excess liquidity 2020, 2021, you got 100,000 rabbits running into a field of gazelles with, 10,000 lions. Yeah, some rabbit can pull out a gazelle, but few are going to pull out a gazelle. But that's a great analogy right there. When there's liquidity, the gazelles are the liquidity. And right now, the liquidity is sparse. Right now, there's 10,000 lions and there's 100 gazelles. The odds are everyone gets eaten. Until you find that one lion that's like, all right, if we eat all the damn rabbits and all the gazelles, there's nothing left and we're all going to frickin' starve. So, one lion could carve out a little region of the territory and, maybe somehow think. They're not biologically programmed. I mean, obviously a shark is maybe more biologically programmed to do that. At least that's what we see in nature. You don't see rabbits sitting on the back of lions. Um, so that's interesting. Interesting thoughts right there. Hope that helps. You'll get to that, obviously. The stream is recorded as always. One Curious View, first week 2023 done. Oh, yes. It's a good week. I think it's okay. I mean, be content. It should be a good year. Sounds like Humpty. Humpty Dumpty sat on a wall. I don't know. I don't know. Gabriel Fraga, how are you? One Curious View. If rabbits start hunting gazelles, you say, but that's exactly what it is. If you some kid with $200 coming in to try and make 10 grand in a market full of lions, that's literally it's a rabbit coming in hunting gazelles. It's just a fascinating analogy if you really think that through. Dark in August, good morning, good morning. 15 people in the stream, 5 likes. Hi, what a market. This is not the time to be disappointed. This is not the time to abandon things that will be a certain way in the future. This is a time to dig in exactly with topics like we're discussing right now to actually understand the way these systems work, why people behave the way they do. This is all the opportunity in the world now because this is a market that instructs us to take less action, to do less things. And I find that fascinating. So obviously humanity works in a way that doesn't serve their best interest. That's why it's such a dwindling market. The viewers dwindle because they don't have interest. They don't think they can succeed. Cost-benefit analysis is skewed against everyone's favor. Opportunity is removed. And that's why they call it depression a depression. But I see opportunity everywhere always, especially for education. And listen, if you spend the next 2 years in shit market and you're prepared for the rabbits running into the field? See, bear in mind that's also the nature of capital markets. It's rabbits running into the field. It's the general population, the small person. And capital markets naturally create concentration of resources. It's just what they do. It's the taking of the money from the many to concentrate it amongst the few. That's what the stock market is. That's what it does. And that's just a reality to digest. This may be an unfortunate reality, but it is an existing reality. So this is by far the time to double down on analogies like this, to understand this is what people are doing. And they do it well because they understand things like this. Gabrielle, thoughts on Elmo Salad? Elmo Salad is... So obviously memes are thrown around all over the crypto space, but I believe that it's too late. I'm an extremist. I mean, I literally take everything to an extreme. I believe that for the majority, it's too late. And I say that because the epoch passed, and it's not part of the rebase. And the rebase is going to be very large. It's like 26 million part of the rebase. So it's the original implementation of Andre's solidly vision done right, and and that was very exciting when I saw his documentation. And clearly, the implementation he didn't even remotely manifest what he wanted to create. But in this V2 implementation, everything that I see from a tokenomics perspective, availability of liquidity perspective, as well as emissions, as the emissions schedule. There's actually an emissions schedule. The devs have done a bang up job in manifesting what I see thus far as what Andre wanted to build. A token that is driven by scarcity, aligned incentives, and and unfortunately, it's the antithesis of what every other system in crypto has built. Every other system in crypto has created relatively meaningful APRs from dilution, and obviously that requires federation. That's the U.S. dollar methodology. The federation is required to remove increasing supply from circulation to avoid the depreciative pressure of increasing supply, the inflationary pressure. It's the natural repercussion of increased supply. Whereas this implementation, Andre talked about, what about scarcity? What about it's productive APR is a manifestation of appreciation. So it's literally the antithesis of what Curve and Convex and R and Balancer do, or any of them. That's what I originally thought was fascinating when he wrote his docs. And that led to, unfortunately, quite a meaningful capital loss. Um, but this time around, it looks like it's on point. Now, when I say it's too late, because part of Andre's implementation was the concept of non-dilution, which basically means instead of later participants having an opportunity to acquire percent ownership just by capital expenditure. I mean, listen, if someone comes along with $20, $30 million, they could buy a piece of Curve, and that's cool. Now, if someone comes along and tries to do that with solidly, and this is very early innings, it doesn't have the liquidity, it doesn't have the DEX integration, but we speculate into the future. It's increasingly more expensive week after week for them to do that, and even if they do that, the entire locked Elmo Salad is rebased. That's what's so fascinating. If someone comes along and buys every single available solidly and locks it as Mo Salad, and then they lock as Elmo Salad, next week, every single person that had a position maintains proportional ownership. So they can't. They literally can't catch up. So that was the vision, whether it's fair or not, because this implementation benefits the owners, the persons who start out owning, and it preserves their ownership. And you could say it's like the rich stay rich, and this is that type of implementation. This is really an incarnation of that kind of vision or that kind of story. The original owners, it is extremely expensive week after week in order to disrupt their relative ownership because of the rebase function. It's non-dilutive. I find that fascinating, and I found that fascinating the second I heard of it. But that also means exactly what I wrote here. One, the rebase already occurred. It just occurred at 11 a.m. today. And two, you must be considerate of the hardest part of engaging a market is seeing an opportunity and being able to identify that the opportunity cannot be taken because of lacking position size. That's the hardest part. And it's very disappointing. Don't overextend the weight of your portfolio. We are all engaging in adversarial markets, and the relative weight of your portfolio is meaningful relative to other actors pursuing an opportunity. Listen, if someone has a stronger position, if you're walking into a basketball court and it's NBA players, do you really want to jump on the opposing team? Come on, stop. Folks are getting in the ring with in totally unbalanced situation. Pros with experience and weight. You're 120 pounds. Don't get into a boxing ring with a 300-pound person that's been doing it for 20 years. You got to work your way up, or maybe you train your ass off, which is what we're doing right now. You realize we're training. We're understanding these psychological considerations, and then you have a skill to gain an edge. Oh, he's got a tell in his left eye, or he's got a twitch in his left shoulder, and you nail his left shoulder, and then he's out. He's got a pop shoulder. So, so that's an interesting thought. I hope that helps. Be careful in these precarious times, and you're gonna. I see it all the time. I see opportunities, and I'm like, I got nothing. I can't do anything. There's nothing I can do. And that is the hardest emotion to get over when there is an opportunity that you cannot partake in because you've done your due diligence and you've assessed that it's something that you cannot capitalize on without just risk reward profile that's completely skewed not in your favor. One curious viewer, are you still comfortable with GUSD given the Genesis DCG solvency issue? Yeah, precarious times with regard to that as well. USDC is something I've stuck with. Food for thought. I have no idea. And that's quite scary. And I'm quite disappointed with Juno and what's playing out. I need a capacity to be able to spend my capital. BitPay is still very functional, but it's not something that I can adjust for. I really want Juno to get back up and running again. I could work around that using the various exchanges, so on and so forth, but it's just not something I want to do. Juno provided extraordinary convenience. Joe, I like the narrative forming around synthetic forex markets like Jarvis Network. Seems like a good market to gain yield on over-collateralized, well-established synthetic sovereign currencies. Yeah, well, do you due diligence? And that is a complicated topic, and it seems out on the complexity spectrum for the vast majority. Yeah, that sounds great, but that's how many people in crypto are thinking about forex? We talk about it here, but we're talking about it literally from a DEX aggregator perspective. DEXs that have billions of dollars worth of capitalization at this point. Just think about that. Time horizon, how long would it take? Does anyone, the actors that are hitting crypto, like Dodge go to the moon, those are the rabbits. Those are the rabbits. So food for thought. We especially on the stream entertain sophisticated financial concepts. Uh, and it brings me to another thing I've said. Great tech or something incredible isn't necessarily a great investment. Maybe it's too complicated for to garner the attention of the rabbits, and that's something to consider. Yeah, I like synthetics too. Synthetics is cool. That they dominate. They are the infrastructure of optimism, just like GMX is the infrastructure of Arbitrum. Lots of considerations. HB, Mo Salad, Whale, Whoop Whoop. Bear in mind, Mo Salad doesn't get the rebase. So Mo Salad, um, be careful. That's all I could say. Solid. Oh, having a solid position doesn't do anything. Having really a Mo Salad position doesn't do anything, except if you're doing capital gain strategy. If you think it'll appreciate, okay, that's another story, and then you could, buy low, sell high. Bear in mind the predator prey analogy we've been talking about the entire stream. So that's your consideration there from a spot position. Happy New Year, Cap. First one of the year, Brian. A pleasure, always. Crypto Jake, SNX is going to enable DAI for trading to make it easier versus SUSD soon, though. Well, that's interesting. I don't really have capacity to digest the full implications of that right now, but obviously SUSD is their collateralized stablecoin using SNX, and that's really what started all of DeFi, that original collateralization, SUSD, and that entire incentive scheme. That's very interesting. Um, it's just I can't have enough of a position size. That this is the perfect example of synthetics. I just don't have it. I would love to own a piece of GMX and synthetics, and now I have no derivative market exposure really. I have forex market exposure, but those are the derivatives market, the synthetics markets. That is a perfect example of my experience with this statement. I can't do it. And I have to live with that disappointment. Food for thought in that regard. 18 people in the stream, 9 likes. We can do better. Last question, and we'll wrap it up. If SPX goes sideways for 10 years, do you think crypto will absorb some new capital as the rate of return from stocks fall? Unknown. It all depends on debt servicing costs and dollar liquidity requirements, really. And that's what drives sell pressure. The only other thing that drives sell pressure is capital flowing from underperforming to outperforming assets. So if the collective market, the psychology of all the market actors says should be outperforming, the odds are it continues to outperform because something going up in price attracts it to go further up in price. Something going up in price draws in people like, oh shit, that's going up in price. So a draining liquidity environment does not entail something just doesn't appreciate. There's plenty of things that will appreciate, even during 1929, Great Depression, and there's plenty of things appreciating, and there's plenty of things appreciating in 2008. Commodities, bonds, so there's always something outperforming, and there's a couple of narratives that you could spin why if there's an epic financial calamity, even some crypto assets can be meaningful. Because what happens is that's a narrative that the the stock market's falling apart, the bond market's rallying, everyone fears giant liquidity crisis. But maybe there's a technology and hundreds of thousands of people are like, oh, this actually is a solution to a variety of problems, and it pulls in capital. So there's a tremendous look. M2 is synthetic currency units in circulation. That's not like valuation of the stock market, like gross valuation. So that's the amount of liquidity in the macro system, which has been draining marginally. M0 has drained more significantly. But there's a tremendous amount of liquidity available. So maybe there's a liquidity shock and a credit crunch, and derivatives and debt starts to implode and M2 contracts significantly. It's still tremendous. It's a massive amount of liquidity. So all that means is in the most catastrophic of situations, capital flows from underperforming to outperforming. If the stock market is down 20%, it's underperforming. Something else is going to be relatively outperforming. A crash isn't a crash. A crash is a redistribution of capital from the underperforming to the outperforming. Don't let the hyperbole fool you. Hope that helps, guys. I'm going to keep it short and sweet today. I wish you all a good one. Friday, January 6, 11:43 a.m. As always, tell everyone to subscribe. If they don't listen, I can't help, and we try and help as many people as possible do just a wee bit better. After party on Discord for the most rational community in the entire crypto space. Listen, it's tough times. It's a little quiet, but we keep it real in there. There's tough things that we as people that are responsible for ourselves financially and our families financially, we have to consider. And if anything, it's a great forum of people that are just trying to do better and trying to make smart decisions. We talk about just financial well-being, capital expenditure, balancing the budget, balancing the books, wealth management, stock market, bonds. Listen, it's not a crypto community. It's a community of rational people that are just trying to do the best they can. Thank you all. Y'all have a good one. Have a safe weekend. Peace.